Greetings, guys. My name is Benedict, and I'm the president at Lambano Trade Capital. So, as you guys know, some of you guys know that we are actually doing a series on our support and resistance trading strategy. This is a very profitable trading strategy, and we just wanted to take this opportunity to teach you guys on how to apply these strategies to a live market. And as you can see, currently my screen here is basically showing you my predictions for Euro USD on a daily chart. And today is the 8th of January 2018, and this is what we're basically looking to transpire in the market over the next coming days and months. So I'll just take you through it as to how I got to this conclusion, and hopefully you actually get to understand the mechanics of the strategy itself. Now I'm just going to remove everything here so that you can see how I got to this conclusion. Just remove everything. No. All right, I'm just going to do this. All right, so as you can see here on this chart now, we have Euro USD in a daily chart, and we've been looking at what we see here on top, which could possibly also be a double top for most people that are trading the conventional way and the traditional way of trading forex, your double tops and your double bottoms. But that is not what we are looking for in this particular trade. We are just looking basically at what our strategy says to us. Now the strategy is basically about support and resistance, and we are basically looking to sell the highs and buy the lows based on price action around those areas. I'm quickly going to show you what we are looking for before we can actually put in buy or sell trade. So the first thing that you want to add onto your platform is what I call Bollingerbands. Bollingerbands, just add the Bollingerbands with the standard deviation and period, so I'm just going to insert that, but I'll focus more on this area here. The strategy itself, it mainly focuses on the piercing of the band, which will actually give you an indication of whether we have reached a support or a resistance, without having to draw any horizontal lines on the chart itself. So one of the things that I was looking for here is that as you can see, sorry about that, let me just put this away. As you can see in this area here, we actually had a piercing of the band, and the price actually got rejected from the high, and it closed within the band, and the market started moving downwards. So we also had the same thing here, where the market actually broke outside of the band, and it had about a 3 days rise outside of the band before it started actually falling back into the band. And this also gave us a nice doji candle there, which also gave us a good indication of a downwards movement in the following days. So what we are particularly looking for is that second piercing of the band itself. So this could have been regarded as our first piercing, and then this could have been the second piercing of our Bollinger Band. From the second piercing, this is where you actually want to now focus your energy and actually placing a trade once that candle closes within the Bollinger Band itself. So In this case, had we actually taken this trade, would have been immediately in profit within the next 3 days. Yeah. So another example, I just want to give you guys another example where we actually had a second piercing. Here's one that actually came close, but it did not quite. In this area here, we understood that if we had we put our support horizontal lines and actually check price movements, historical data, we would have identified that this is actually a support area, and we are trying to focus our energy and analysis uh, on these areas here, trying to find a bouncing point. So now, as you can see here in this area here, the price actually broke through the band and it closed above the band, within the band. I think for some people, they actually want to trade the first piercing of the band, and sometimes I don't recommend that, but you can still actually do that to some extent, because sometimes price does not come down for that second piercing of the band. It just basically starts moving um, in the reversal there and actually starts retracing there. So in this price action here, you can see that as soon as this price started closing there, we had about 4 days where the market was actually just holding this level there. It tried to actually break up to the upside, but the next day actually closed down further, showing us there is a much stronger momentum from the sellers. So it actually started breaking down and going below the previous low here. We started going below that, and but as soon as it got to this area here, it actually started making an inside bar, and then started going in the retracement mode upside on the upside there. So that is one of the things that we are looking for. In this case, it did not give us the full picture like it did on this particular trade, on this particular area here, but it was close to doing that. So basically, we just want to focus on these type of price action movements when it comes to the Bollingers. So currently the market is at a double top, where now we have a very strong resistance area there, and it came back into this area and actually has been consolidating within the area for the past 4 days now. This is the 5th day where the market has been ranging between the $1.20 there and the $1.20 and the 8 there. So it's basically like 80 pips difference there, where the market has been playing around that area there. And as you can see, it actually broke out of the band for 2 days, and then it started coming back into the band on the 3rd day there, and then on the 4th day it actually broke out again to actually try and attempt to take out the highs of this first green candle here. Now the when was it? Friday it actually came back down now. So because it's Monday and there is some fundamental market news happening today, we can actually anticipate dollar actually trying to make it run to the downside. So this is the first thing that I'm looking for in terms of identifying my support and resistance areas, and then I actually go back to the fundamentals of doing my chart analysis, and I'm gonna remove the Bollingers, and now I'm actually going to change my candlestick chart to a line chart. Now the reason I do that is so that I can actually identify proper support and resistance levels. Now in this case, because we already have some action historical data that already happened there, I can actually identify much easier. Just do that. Now the top of this is here. This is where the resistance is, and as you can see, currently it actually broke above that resistance on on a daily chart. It actually broke above it, and now we have a newer uh, a newer high. So now I want to identify my support areas as well, so I'm just going to place those there. Actually, I can take it a bit higher there, because now, as you can see, we have a bouncing point there, another bouncing point there, and another bouncing point there, and another one here. So that could be a very significant turning point for us. And then we have another one here at the low, of course. Just put that there, and we have another one right here, somewhere here. Yes, there you go. As you can see, we have a wait for it. We have a resistance there, a new support there, and it kept on bouncing and actually consolidating there. And then now we have a new resistance as well once it broke through to the downside. So it's quite a significant area there as well. So we just hold on to that. This will be used as our first target once the market starts actually coming down. So once I'm done plotting my support and resistance horizontal lines, I can actually change back into my candlesticks, and as you can see right there in this area here, the price was failing to break and stay above this line here, this horizontal line. So now we're actually focused on what's happening in this area here, because now we can see that the market has been basically consolidating, collecting orders around the same area, and it's actually just basically gathering orders, momentum, and we, for those that actually understand the market structures and everything, we identify that whenever there's a consolidation, there's usually a very large momentum movement that comes after it. It could be a start of a new trend, and or it could be a very strong breakout, kind of like in this area here, where we had a large consolidation there for about 6 days. Market actually made a fakie to the downside, and then it started a new trend right there. So for those that didn't know, we actually mainly focus on finding those support and resistance areas, and then when the market goes into these levels of support resistance and starts consolidating, that's a very good sign for us then, because now in most cases these consolidations are used to collect orders for reversing the market, or just retracing the market, even if it's in an uptrend or something like that. So now I truly believe that the market will actually start falling. So now I just placed a new horizontal line above here because of what the price has done there. So because now in this area here it actually made a new high, so hence I actually placed the horizontal line there to indicate to me that this is a new high, and I know that we are now actually in a reversal zone. So now once the market starts breaking down below these 4 candles, as you can see there, if I am to zoom in, you can see that the market has been failing to actually come down below here at the 196, no, not 196, 193 area, because it has been consolidating there and closing above that area there. So as you can see, today it actually tried moving upwards, but it seems like it's gonna start falling soon enough. So it's close to completing our formation, so we'll be looking for that downwards movement. This is not particularly the type of trade that we want to take, because at this current moment it hasn't given us our second pierce, but it's a good indication as well, because it actually shows you that you do not need the second pierce in this scenario, because you have another very valuable indication or signal, which is the consolidation itself, that the market is more probably starting to change direction, so it's gathering some momentum there from the sellers as well to actually start pushing the prices lower. So we'll just place the sell stop at 1.2, because now we're expecting once price actually reaches that level, it will actually start tumbling down even stronger. So we'll be anticipating a downwards movement from this area here. If it does give us a second piercing of the band, we'll still be able to, you know, hold the trade until we actually reach our first target. So that is one of the reasons why we're actually looking at this trade, so I hope you guys enjoy this video and you learn some few concepts from this video, on how to plot your support and resistance, and identifying reversal areas within the support or resistance, and how you can actually go about it. But I'd like to also add that, for me personally, one of my favorite signals, candlestick patterns or signals to indicate for me to actually how the trade is going to play out, is if should there be a doji or some sort of reversal candle, like maybe railroad tracks, or an inside bar, or some sort of reversal candlesticks. For those that are not familiar with reversal candlesticks, I highly suggest that you start googling and getting books about candlesticks to learn more about those reversal candlesticks, so that you can identify them within these turning points, these major turning points as well. Those give you a very good edge in identifying that. So as you can see as well here, in this area here, the way my resistance area, my support area was placed in this area here, as you can see, the price actually came below but failed to stay below. So this was a good indication for a buy. And here's an inside bar as well. So this is a very good reversal pattern, candlestick pattern here. And then should you take this trade, you basically taking it at the close of this inside bar and putting your stop loss at the very bottom of that down candle there, that bearish candle there. You're just gonna be putting your stop there, and then you'll be taking your trade from there. So we basically have a minimum risk for a very high reward. This is basically could be like a 3-to-1 ratio, just from this area here to this area here. And as you can see, actually broke through even further. So basically you could have gathered about a 8-to-1 ratio just on this trade here. So these are the type of trades that we are actually looking for, and these are the type of trades that will actually make you a lot of money, particularly if you are using a daily chart as well. So I highly advise that should you be looking for these type of setups, that you actually go through uh, your charts using your Bollingerbands and your support and resistance areas, mostly on a daily chart and a weekly chart, or a 4-hour chart, because now those are the more prominent time frames to trade this type of strategy, because the market is not, it's less volatile, and it paints a clearer picture for you going forward, unlike a 15-minute chart. um, some candlestick patterns on a 15-minute chart are um, not so strong, so to say, because they can basically eliminate the probability ratios of your trade. But saying a doji on a daily chart is basically a very significant indication of possible turning point, because this is the time frames that most institutional traders trade from. So it's good to practice trading this strategy on those type of time frames. And then you just basically swing trade and just wait for your profits to show themselves. So hopefully this video has helped you a lot in terms of identifying those support and resistance areas, and identifying where you could possibly enter your trade as well, at the very top or at the very bottom, giving you a very low risk for a very high reward. So my name is Benedict again, and thank you for watching this video.